Hi guys, this is Ray again, and in this video we're going to do a walkthrough of the swing trade plan on MGNI. We'll follow the similar format that we have been following for all of these video walkthroughs. First, we'll go over the process on how MGNI makes it to our watch list, followed by a price and volume analysis of what caught my eye before MGNI was a swing trade plan, the point of entry for that particular stock, and then how we manage the position. So let's get started. MGNI itself, so one of the first things that caught my eye in all of this was the larger base underneath. However, it's still, underneath the $15 mark, but the consolidation pattern as it made its move up from the $8 mark to the $20 mark. So when I'm flipping charts, I'm always looking to the left side to see what's happened already, and then that sort of gives you key insight on what the behavior of the stock is. Does it respect key moving averages? And that's what you want to learn about the stock and its behavior of the past. So that when you're trading it, either in this area or in this area, you know the character of the stock and you've learned the character of the stock itself. So one of the first things that we could start with is the process and how do we get, again, an MGNI to be on our watch list. MGNI made it to our HDF watch list after moving up from October to about the December area, from let's say the $8 to $9 range to about $20 range. The HDF criteria itself is 8. Itself is a 100% move in 8 weeks. That's a scan that we run. That's called the HDF scan. It gives you candidates. It won't give you proper high type flags all ready for you to start buying, but this is just the HDF candidates scan. And then the HDF watch list is updated on a weekly basis based on the HDF scan itself. So MGNI made it to the HDF watch list around in this area. One of the things that I see here, we were fairly late on picking this up as a stock. There could have been potential positioning once it made the HDF watch list in this zone, but it just so happened, you still have the stock on your HDF watch list. It sort of breaks out, comes back in, and now you could potentially maybe position somewhere over here or somewhere over here if it did something like this instead of coming back to the 25 range. So that covers the process part of it. It's key that you learn the past behavior of the stock by looking at the left side of the chart, so that you can learn its behavior and how it trades, so that when you're actually in a trade itself, how it's going to act. So it sort of started respecting your 21 DMA, 23 EMA in this spot before it broke out, and then it starts respecting again your 21 DMA area, right, and it runs up, and now it's starting to respect your 21 and 23 EMA in this area, and then it runs up. That's the character of the stock from this point on. So when we're looking, when we're over here and we're analyzing, and we don't know this has happened yet, right? We're looking at the left side and we're looking at, what did the stock do? There's a fairly large consolidation pattern. Can't call this a base because the depth is way too much, right? And it's a sub 15 stock, so you have to keep that in perspective. But the thing that you want to key in on is, what in the stock is starting to change. It's the KMAs were pretty much all bunched up over in this point. At this point, it was a fairly low price stock, but comes up now, it starts respecting your moving averages. That's what you're trying to learn about the stock. The other thing that you want to learn about the stock is does it trade tightly, right? Is the character of the stock one that trades tightly? This is something that you want to keep in mind as well. It went from the $12 range to about the $9 range. So it has the tendency to come off of highs, right? That's another thing you want to make a note of. It has that tendency, and even, from the 12 to 9, it kept that tendency. The other tendency is for it to trade fairly tightly for multiple days. And it did that here, right here. This is all before we see price expansion. So you're trying to learn the character of the stock and how it is changing. Has the character changed recently, right? So that's, you always look to the left of the chart to be learning those things. The other thing is, once it makes it to the HDF watch list, is I always analyze, are the blue bars bigger than the pink bars on the up days, and how is the PV before it's run up to the $20 mark. So looking at it, if you look at it over here, the up days we get increasing volume, right, with a move, and then price consolidates, we sort of see volume taper off. That's good PV, analysis. Increasing price action accompanied by increasing volume, consolidation patterns accompanied by, some sort of decrease in volume relative to the up move. That's good action. And then the other thing we're looking for is, as it made the HDF watch list, what was the volume? And you can see this particular stick and the follow-on sticks, volume really starts to step up. This moving average, which is the 20-day moving average on the volume, basically shows us that there's an increase in daily average volume as price made its move up. Again, that is a positive for a stock from a price volume analysis point of view. Now, once it makes it here, you start stocking it for entry. After a steep run up like that, you want consolidation in the stock or some sort of formation where you can just define your risk. Risk always comes first. If MGNI again does something like this and it just keeps going, there's no consolidation, no entry, then so be it. You won't get to position in this particular name. The only thing that we could potentially define in the markets is our risk before we enter the name itself. We can't buy in the middle of nowhere and hope that it just keeps going. If you tend to do that and say you buy over here and price retraces, then you can't hold. So the first spot that I see here for a potential buy, and we didn't have it as a swing trade plan, it just, maybe it's something that I missed, or just something I wasn't on top of within the universe of stocks. But this could have been a potential entry area right over here as price moves up, and then we see multiple days of below average volume. So when we see a drop below average volume or some sort of dry up in volume, that says that the negotiation between the buyers in the market and the sellers in the market, they're sort of tired now after MGNI moved from the top, from the 22 area to the 17 area, right? So there's going to be some sort of direction, and direction can be this way, direction can be that way. It doesn't have to be up. We have to, again, keep market trend in mind. If a market's in a confirmed uptrend, we're allowed to initiate new positions, put on greater risk, or increase exposure incrementally as we make progress in our portfolios. So this is sort of the first spot that I see for entry. Obviously, this wasn't a swing trade plan at this spot, but when you're analyzing your winners, you also want to see, could I have potentially positioned in this name a little bit earlier, right? Because you're always learning or always trying to improve your processes based on chart analysis. So we picked up MGNI at about this spot, and the initial interest for entry was, your 30 range and your 25 range. So these were levels of interest per the swing trade plan. So we said on watch for RS versus the 25 mark on market turbulence, and on watch for 30 on strength. So it just so happens when we started, watching the 30, it broke down fairly quickly. That puts 25 on watch right away. And the reason we had it as a swing trade plan was increasing price action. We had increasing price with increasing volume. That's again from a price and volume point of view. That's a positive, right? You want your increase in price, which is about the 20 range to 33 range, to be accompanied by increasing volume. That's your basic PV. That's how it made it to that. That's why it was of initial interest as a swing trade plan. And then we defined areas that we're interested in potentially positioning. So if MGNI consolidated here right above the 30, and we could define our risk versus the 30, and then price moves up, then that would have been one scenario to be planning for. The other scenario that we plan for is price comes back to 25, and then we see how it acts there, and then it could potentially move up. MGNI itself, after we posted the swing trade plan, we saw the largest daily volume ever on a news catalyst, and the news catalyst was basically a short report for this particular name, but the key here was the highest daily volume ever shows that there's some institutional, this is institutional volume at this point. This is not entirely retail. So whenever we see this characteristic of highest daily volume ever on a particular name, that shows you new interest in the name. Now, in this particular instance, the closing range wasn't the best, but the key here was even on a closing basis, MGNI was holding the 25 mark, which basically gives us good insight. When we had a plan coming in to watch for RS versus the 25, we get a short report, news catalyst, upgrade, downgrade, whatever, doesn't matter, with highest daily volume ever. And then the fact that it's holding 25 shows us institutional thought process. So this is really a good edge in the markets. So the fact that it held 25 and then held 25 and held 25 again was a potential spot to be positioning at. And then on a closing basis, it closed all three closes here on these three bars were above 25. And then it was fairly cooperative after that. Next, we could, that's your first point of entry on this stock. The other point of entry that we highlighted was 30 on strength. So when the stock, came in, we were also interested to see if it could get, if it holds 25 and then it could come out and test the 30 mark. So it tests the 30 mark here, right? And it sort of retraces on increasing volume versus prior day, which is a positive, and then it comes back the next day, tests, undercuts and rallies from the 30, and at this point, both 25, that was your first point of entry, and then 30 was your second point of entry on this stock. For example, if you got a partial fill, or if you want to put on a smaller position at 25, the 30 mark could be an add-on point, and then you also have your traditional 32.98 as your third point of entry on this stock with increasing volume versus prior day, and also above average volume as well, which is a positive. So those were your points of entries. Your 25 would have been your first one, 30 would have been the second, and then 32.98 would have been the third. The last thing that I'll cover here is how do you manage a position like this once you're in it. In this particular case, market was consolidating, MGNI is outperforming right away. That's, the ideal scenario that you want to be in with your stocks. So how do you manage it once you start building cushion from, say, if you have a full position near the 25, or if you have a full position near the $30 mark, once you start building that cushion, revert back to the key moving averages of the 21 DMA that we look at, 23 EMA initially, and then once you build a larger cushion, one can start reverting to, if the thought process behind the trade is to be in it as long as you possibly can, as long as the market remains in a uptrend, right? As long as the market remains in an uptrend and price acts well, your 50 can sort of be your guide if you want to hold it through multiple cycles or multiple corrections in the stock market. Now, if your personality is one that, you want to secure your profits a little bit earlier, then that is what you have to be doing. Then sort of your 21 and your 23, as they rise with price consolidating in a confirmed uptrend, can be your guide. Now, this position management comes down to personality, risk appetite, how the market's acting, and what your sell rules are. So one of the basic sell rules, again, if the position in this market in a 2021 or a 2020 market would be less than 50%, right? Sort of 2 closes below 21 DMA or 23 EMA, greater than 50%, 2 closes below 50 DMA or your 65 EMA. So that's your position management. So a quick overview. How did MGNI make it to our watch list? We do the HDF candidates scan, right? Then that's how it makes it to the HDF watch list. Once it's on the HDF watch list, you just monitor price and volume. 2, you want to learn the character of the stock to the left of your chart. So if you pick it up here, you want to learn the character of the stock from this point and on, right? So you do, it's a larger base under the $13 mark. There was, increasing volume with increasing price, decreasing volume with consolidation in price. The stock started respecting your 21 DMA, and now that is something you want to look for, and it did so over here as well. Now, respect for KMAs won't always be to the dot or perfect. You have to keep in mind it could be an undercut and rally scenario. So we're just interested in the stock holding key moving averages, say on a closing basis only, right? So if a KMA is like this and a stock, comes undercuts and then reclaims it, that's fine. That's absolutely fine. That's your undercut and rally. KMAs, don't be treating KMAs as, if this is your 21 DMA, expect the stock to just do this. Very rarely will you see stocks do that. So there will always be some sort of undercut rally. So this is just a guide. A moving average is just a guide. It's not, don't treat them as indicators. It's just the best use of them is to see what the stock is respecting recently, right? So this started respecting it recently, and then when it came back in, and there was another respect for that key moving average. So that we covered process, price volume analysis, learning the behavior of the stock, point of entry. This point, 30 mark through the prior high, could have been also over here, right? Given that there's some sort of dry up in volume. So that is basically how MGNI was a swing trade plan. And it just so happens to be that this one went from about the 25 mark to the $1.50 mark, which is a 100% gain from entry area. Given that the market is super strong and showing very high level of strength, and this trend is very, very strong in the 2020 markets and 2021 markets. We'll leave it at that, and I'll see you guys in the next video. Thank you.